Let's talk about money, honey. It's something we all need, but managing it can sometimes feel like a daunting task. Managing your finances is like taking care of your health. Both require attention, care, and regular checkups to ensure everything is in good shape. You need regular checkups to make sure everything is running smoothly. Just like you wouldn't ignore your health, you shouldn't ignore your finances. That's where a bank reconciliation statement, or BRS, comes in. It's a crucial tool for keeping your financial health in check. It's like taking your finances to the doctor. A BRS helps you diagnose any discrepancies and ensures your records are accurate. Just like a doctor checks your pulse, a BRS helps you keep your finger on the pulse of your money. It's a way to monitor your financial heartbeat. It's a simple but powerful tool that every business owner and individual should understand and use regularly. It can save you from financial headaches down the road. Think of it as your financial detective, helping you spot errors and prevent potential problems before they become serious issues. In this essay, we're going to break down the mystery of the BRS. We'll explore its components and how it fits into your financial routine. We'll learn what it is, why it's essential, and how you can easily prepare one yourself. By understanding the BRS, you can take control of your financial destiny. By the end of this journey, you'll be a BRS pro, ready to take control of your finances and make smarter money decisions. You'll feel more confident and secure. So, grab your financial first aid kit and let's get started. Together, we'll ensure your financial pulse stays strong and steady. A bank reconciliation statement, BRS, is a document that compares your company's cash book with the bank statement. It helps you find any differences between the two. Think of it as a detective's report, highlighting any discrepancies that need your attention. It's a simple concept, really. You take your bank statement and your cash book, then you line them up side by side. Then you look for any transactions that appear in one document, but not the other. These differences could be caused by timing issues, bank errors, or even gasp fraud. By identifying and explaining these differences, you ensure that your records are accurate and up to date. It's like solving a puzzle, and the reward is financial peace of mind. Why is a BRS so important, you ask? Well, imagine this. You go to pay your employees, but your account is short, or worse, you think you have more money than you actually do. That's a recipe for disaster. A BRS helps you avoid these nightmares by detecting errors. We're all human, and mistakes happen. A BRS helps you catch errors in your books or the bank's records before they snowball into bigger problems. Preventing fraud? Sadly, fraud is a reality. A BRS can help you identify any unauthorized transactions or suspicious activity in your account. Improving cash management. By reconciling your accounts, you get a clear picture of your cash flow, which helps you make better financial decisions. In short, a BRS is your secret weapon for maintaining accurate financial records, preventing costly mistakes, and making informed decisions about your money. It's like having a financial safety net. So, what causes these pesky differences between your cash book and bank statement? It's a common issue that can be quite frustrating, but understanding the reasons behind it can help you manage your finances better. Let's play detective and investigate some common culprits. First up, timing differences. These occur when there's a delay between recording a transaction and when it actually gets processed by the bank. For example, deposits in transit. You've recorded a deposit in your cash book, but the bank hasn't processed it yet. This is often the case with checks or cash deposits made after banking hours. Think of a check you deposited late Friday afternoon. It won't show up in your bank statement until the next business day. Next, outstanding checks. You've written a check, but the recipient hasn't cashed it yet. This can create a temporary discrepancy in your records. Maybe they're out of town or just slow to deposit checks. This delay can cause your cash book to show less money than your bank statement. Bank-initiated transactions are another factor. Bank charges. Those pesky fees for account maintenance or other services can sneak up on you. These charges are often deducted automatically and can be easy to overlook. Interest earned. Hey, free money! The bank may have credited your account with interest, which you haven't recorded yet. This can make your bank balance appear higher than your cash book. Errors are another common issue. Mistakes in recording transactions. We all make typos. You might have transposed numbers or entered the wrong amount. These small errors can lead to significant discrepancies. Bank errors. Believe it or not, even banks make mistakes. These errors are rare but can happen, and they can cause confusion in your records. They're rare, but they do happen. By keeping an eye out for these issues, you can catch them early and correct them. By understanding these common culprits, you'll be better equipped to spot and reconcile any differences that pop up in your BRS. Remember, knowledge is power. With this knowledge, you can maintain accurate financial records and avoid unnecessary stress. Section 5. Mastering the Art of BRS, a step-by-step guide to financial harmony. In this section, we will break down the process into manageable steps to help you achieve financial harmony with ease. Ready to become a BRS master? Let's dive in and get started on this journey together. It's easier than you think. Follow these simple steps, and you'll be on your way to mastering BRS in no time. Step 1. Gather your supplies. Grab your bank statement, your cash book, or general ledger, and make sure you have everything you need in one place, and a pen or pencil. Having these tools at hand will make the process smoother. You can also use a spreadsheet to keep things organized and easily accessible, or accounting software to make things even easier. These tools can help automate some of the steps and reduce errors. Step 2. Compare and contrast. This is where the real work begins. Carefully compare each transaction listed on your bank statement with your cash book. Take your time to ensure accuracy. Look for any transactions that appear in one document but not the other. These discrepancies are key to understanding your financial status. Step 3. Identify the differences. This step is crucial for accurate reconciliation. Once you've found a difference, make a note of it. Determine the reason behind it. Understanding why these differences exist will help you address them properly. Is it a timing difference, a bank-initiated transaction, or an error? Step 4. Make adjustments. For timing differences, note the dates and adjust accordingly. Adjust your bank statement balance to reflect the outstanding deposits and checks. This ensures your records are up to date. To reflect the outstanding deposits and checks. For bank-initiated transactions and errors, make the necessary corrections in your cash book. Adjust your cash book balance accordingly. This will help you maintain accurate financial records. Step 5. Reconcile and celebrate. This is the final step in the process. Once you've made all the necessary adjustments, review your documents one last time. Your adjusted bank statement balance should match your adjusted cash book balance. This indicates successful reconciliation. Your adjusted cash book balance. Congratulations, you've successfully reconciled your account. This is a significant achievement. You've successfully reconciled your account. Remember, practice makes perfect. The more you practice, the more proficient you'll become. The more you reconcile your accounts, the easier and faster it will become. Consistency is key. The easier and faster it will become. Keep at it, and soon, financial harmony will be second nature to you. Section 6. Timing is everything. When to reconcile for maximum impact. Timing is crucial when it comes to bank reconciliation statements. Don't wait until the end of the year when you're drowning in paperwork. Instead, reconcile your accounts regularly, ideally monthly. Monthly reconciliation allows you to catch errors early. The sooner you identify an error, the easier it is to fix. It also helps you stay on top of your cash flow. Regular reconciliation gives you a clear picture of your spending habits and helps you make informed financial decisions. And it reduces stress. Knowing your accounts are reconciled gives you peace of mind and frees up your time to focus on other important tasks. Think of it as a financial checkup. Just like you wouldn't wait years between doctor's appointments, don't wait months between reconciliations. Schedule it in your calendar and make it a non-negotiable part of your financial routine. Section 7. The Power of BRS. Key takeaways for financial success. Congratulations on mastering the art of bank reconciliation statements. You're well on your way to financial clarity and confidence. Here are some key takeaways to remember. BRS is essential. It's not just an accounting chore, it's a vital tool for managing your money effectively. Regularity is key. Reconcile your accounts monthly to catch errors early and stay on top of your cash flow. Accuracy is crucial. Double-check your work and be meticulous in your reconciliation process. Seek help if needed. Don't be afraid to ask for help from an accountant or bookkeeper if you're struggling with BRS. Remember, knowledge is power. And by understanding the importance of BRS, you're empowered to take control of your finances and make smarter money decisions. Section 8. BRS. In the Digital Age, Embracing Technology for Seamless Reconciliation. In today's digital world, technology has revolutionized the way we manage our finances, and BRS is no exception. Gone are the days of manually comparing paper statements and struggling with tedious calculations. Accounting software and online banking platforms offer a range of features that streamline the reconciliation process, making it faster, easier, and more efficient. These features include automatic bank feeds. Your transactions are automatically imported from your bank account, eliminating the need for manual entry. Transaction matching. Software can match transactions from your bank statement to your cash book, saving you time and reducing the risk of errors. Reconciliation reports. Generate comprehensive reports that provide a detailed breakdown of your reconciled accounts. By embracing these technological advancements, you can automate many of the manual tasks associated with BRS, freeing up your time and reducing the risk of errors. Section 9. Conclusion: BRS. Your secret weapon for financial clarity and confidence. Mastering the art of bank reconciliation statements is a fundamental step towards achieving financial well-being. It's like having a financial GPS, guiding you towards accuracy, clarity, and peace of mind. By understanding the what, why, and how of BRS, you're equipped to detect and correct errors. Don't let costly mistakes derail your financial progress. Prevent fraud. Safeguard your hard-earned money from unauthorized transactions. Improve cash management. Make informed financial decisions based on accurate and up-to-date information. So, make BRS a non-negotiable part of your financial routine. Embrace the power of technology, and enjoy the peace of mind that comes with knowing your finances are in order. Remember, knowledge is power, and with the right tools and knowledge, you can achieve your financial goals and live a life of abundance.